Thank you very much, Richard, for asking me to do a brief presentation on the Dutch real estate market. I think the Dutch real estate market has been suffering from a bad image over the last couple of years, and I think the main question is this image based on real facts or on perception? And the question is also, is this about to change? To do this, I would like to put the Dutch market in a European perspective. To see if that image of the Dutch market is actually true. The first slide, let's look at some macroeconomics. If we look at the GDP figures of a couple of European countries, the Netherlands, Germany, France, the UK, and outside Europe, I've used the US as an outsider reference. GDP for the several countries, you see, if you look at the Netherlands, nothing spectacular. It's a bit lower than the rest. But if you know that the GDP per capita in the Netherlands is still one of the highest in Europe, and in fact the second highest just after Luxembourg. Then if we look at inflation, it's a bit higher in the Netherlands at the moment, but still nothing spectacular, and I think something we can deal with. Unemployment, still one of the lowest unemployment rates in Europe. Also on that side of the economy we're scoring quite good. Government debt to GDP, a ratio which in the Netherlands is very attractive compared to other countries. The Netherlands is still a AAA rated country, still proven very good economy-wise. If we look at the vacancy levels in the different countries, because I think that's where the image comes from. In Holland we have a complete database of all properties in the Netherlands. All office buildings, for example, from all the way up in the north to all the way in the south, we have in a database, and we have vacancy levels for all these buildings. Therefore we are able to produce an aggregate vacancy number for the country, and this is being compared with CBDs in other countries, and I think that is a wrong comparison. If you're comparing CBDs, you should be comparing CBDs in Amsterdam with CBDs in London, Paris, Frankfurt, etc. And every city itself has a CBD, but also has a secondary or a worse location. And if you want to do the right comparison, CBDs to CBDs, secondary to secondary, and that's what I'm going to do in the next slides. Look at Amsterdam. Our prime location in Amsterdam is the south axis. Current vacancy is around 7%, and it's declining fast. Also, we have some locations in Amsterdam which are worse off. There you see the higher vacancy levels. When you make investments, you should judge it on the right figures and not on aggregate numbers, because then I think the decisions that will be made is very dangerous. Looking at Frankfurt, it's a similar picture. Prime vacancy relatively low, around 13%. Other districts, 28 plus. Looking at Paris, it's again for the prime, it's low level, secondary, high vacancies. Looking at London, similar picture. If we then take some other major cities in Europe and we compare Amsterdam to the other markets, you see that Amsterdam is actually just in the middle and actually not performing that much different than the other major cities here in Europe. Again, I think this is an image which has not been reflected in the international markets as of yet, but it could be about to change. If we now look at our investment markets over the last 10 years, and what do we see? Obviously, increasing volumes just before the crisis hit our country. 2007 was our top year, nearly 14 billion in investments in the Netherlands. After that, the volumes came down quite drastically, and we're now stabilized at around 4 billion. But that's also not different from other countries. Now, if we look at the last 5 quarters, what has happened? And the interesting part is what you see in the office part and in the retail part. Investment volumes in the office part have increased drastically. Our estimate for the latest quarter is about half of the market. This is a trend we'll see continuing for the near future, and the same, I'm afraid I have to say, for retail. This trend will continue as well. The retail investment volumes will be declining, and office will be increasing. Then if we look at our government yields, and I also included the German government yields. If we then compare that to our commercial real estate yields, you'll see there's a big gap. It's still a historic high gap. And this proves that our investment market in the Netherlands is still very attractive priced, although government yields are coming up a bit. Then again, looking at yields in their cycle, this is a graph which shows you a 20-year cycle of prime investment yields in the various countries. The yellow dot shows you the highest yield over the last 20 years. The red dot shows you the lowest yield over the last 20 years. If we then look at the Amsterdam market, it's the second from the right. You see that we are relatively high in the yield cycle. And if you compare that, for example, to London all the way on the left, they are really relatively low in the yield cycle. This proves again that from an international perspective, pan-European perspective, the Dutch market is attractively priced. And I believe there are some really good opportunities to be found at the moment. Going back again to the bad image, and if this is right or not, is it based on facts or perception? I think it's exactly the gap between perception and the realistic figures, which offers the opportunities in the Netherlands at the moment. This aggregate vacancy number of our country doesn't say anything. You should look at the different product markets, at the different locations. There are quite a few locations nowadays in the Netherlands, and especially in Amsterdam and the South Axis, which are moving in a different direction. We see vacancies coming down, we see yield compression taking place at the moment. We see much more investor interest from other countries. I think this trend we've seen already a year ago. I think the international investment community has picked this up. Everybody believes that the market in Holland is bottoming out, and this is the right time to start investing in the Netherlands. That concludes my presentation. Thanks.